Hello everyone, welcome back to Thursday Thoughts with Anthony. This week we're going to go over a news item that maybe you had your eye on or maybe you didn't. But before I get to it, just a reminder, if you haven't already, please subscribe to our channel. It does really help us out. This week, if you didn't know it, there was a spending bill passed in Congress to avert a government shutdown. And if that sounds familiar, it's because this is the third in a series going back to last fall that has been passed to keep the government open on a short-term basis. And I say short-term because come the first week of March, we're going to have to do this all over again. And really, if you're going to be cynical like me, was it passed because there's an impending snowstorm in DC and everybody wanted to get out of town? Maybe, maybe not. Maybe it was for the good of the country after all. But from an investment perspective, you may have heard me say this before, government shutdowns, the last four anyway, have not negatively impacted the market. In fact, the market has gone up while the government has been shut down. It does seem like we might avert a shutdown altogether. Maybe they'll get their act together again in March and kick the can a little further down the road. But even if they don't, I don't necessarily see a federal government shutdown severely negatively impacting the markets or any of our accounts. Of course, there's no guarantees on that, but with history as a guide anyway, it doesn't seem like that's an issue that really causes the markets to flip over or go negative, I guess would be another way to put it. So something we will continue to watch, obviously, because we don't want the government to shut down, but if it does in March, which is the next deadline, we'll know that the markets in the past anyway have not reacted too negatively to that. So stay tuned next week for the next edition of Thursday Thoughts.